Hi, I'm Dan Wilton, the CEO of First Mining Gold. First Mining is a gold project developer with two 5 million ounce gold projects in Canada, the Springpole Gold Project in Ontario, which we're moving through the environmental assessment process, and the recently consolidated ownership of the Duparquet Gold Project in Quebec.
Dan, good to see you, and Happy New Year to you, sir. Look, we thought we kind of catch up with you, get a sense of what 2023 is going to look like. But first of all, let's look back a bit. 2022, obviously, Duparquet acquisition was significant and meaningful, and you're going to have to communicate to the market why and how that thing aids you. But what are the other moments in 22 that you got right, you think, which is going to set you up for 23?
Yeah, listen, I think one of the biggest ones was on the environmental assessment process at Springpole. So submitting that 10,000 page environmental assessment document draft. And we've now gone through the process where we've got, first round of comments back from all of the regulators. I think it gives us more confidence every day as you address, more of those questions and concerns, that this is a process that is moving forward. So that's, on the Springpole side, that's one of the biggest things. And I think one of the other biggest things that we're just starting to ramp up now was a lot of kind of in the background work over 2022 was the building of our exploration team led by James Maxwell, and James has built a great team, but like that first season of, real mapping, sampling, on the ground, fundamental geology in the Birch-Uchi district around Springpole, I think that's really going to start bearing fruit in 2023 as we're able to start advancing exploration programs there. So when I think about the two real catalysts, those, there's lots of other stuff going on in the background in terms of technical de-risking. But I think at Springpole, certainly those are two of the big things I think we got right.
Right, but tell me about this, because I'm always fascinated by the kind of what's going on in the heads of the management team and the board. You've already got a big project there in terms of ounces, right? So you're building an exploration team, and we get questions sent in all the time about people going, right, well, when's this thing get into production, right? So you're talking about exploration still because there's some upside. So why is that the smartest use of your money and time and effort on an already big project?
Well, I think a couple of reasons. Number one, the only thing better than a 5 million ounce gold project is a 6 million ounce gold project, right?
Well, no, I'll tell you, there's something better than that, Dan, and that's cash.
Yeah,
that's better than all of the above. So that's the question people want answered. So why is this strategy the best strategy?
Yeah, no, I hear you. It's not growth for growth's sake, but it is demonstrating another real strategic angle, which is that the perception of Springpole was that the deposit was confined and cut off, and there wasn't any real upside opportunity. When you look at how you get real strategic value for large projects, you have to have defined resource, but you also have to have some of that exploration potential. And we think at Springpole, it's not just around the deposit. And there is, we think, some very good exploration potential, within a couple of kilometers, like real sort of deposit resource expansion in the existing footprint. But then we've got 70,000 hectares of greenfield exploration ground that we've consolidated around the project, a number of million ounce plus targets that you can go after. And that's the thing that turns this from, a nice project into a generational development opportunity. And those are, I think, the things that strategically can really set a project apart.
Right, strategically for who? Because there's, in an environment like this, right, you usually, when gold's at these sorts of levels, the producers are making a ton of money. They start sniffing around and, they start looking at projects, and they'll like some, they'll discount a heck of a lot more. What is the picture you're trying to build for those guys? Like I say, it's already big. I get the kind of blue sky of the exploration potential there, but what else do you need to do to kind of tie a nice pretty bow around Springpole and say, look, guys, that's ready to go, if that's your strategy?
Yeah, well, I think our strategy is advancing this project with the team and the resources that we have to get it, to that construction decision. We've been very clear that there's a whole bunch of different alternatives that can come out when you get to that point. We're not to that point yet. We think that point's, call it 2.5 years away from environmental assessment approval. But there's significant de-risking in those 2.5 years that if we achieve our milestones there, this project is not going to be trading at $8 an ounce anymore. It should be trading at, if you look historically, $50 to $100 an ounce. So, I think that also just goes to increasing the profile of this project, which, not in the financial markets, not so much, but it's interesting. We're starting to get a lot of positive feedback in regulatory circles that Springpole's kind of the next big project in Ontario that's going through really the heart of its environmental assessment process. So we've got great focus from the regulators, great support from the regulators as we're moving it forward. Still a lot of work to do, but I think ultimately it is about framing this project so that when you get to the point where you can make that construction decision, you have the best long-term opportunity there that you can. And I think, this regional exploration is an important part of that. Yes, it costs some money, but I think if you're able to define something that, could have resource potential of another 3 to 5 million ounces, it turns this from an interesting project that a, producing mining company might want to own to, a world-class project that a big mining company needs to own.
Right. So in terms of that exploration, that's you're not looking to expand the current Springpole project. You're talking about the kind of wider area. Is that right?
No, it's a little bit of both. It's a little bit of both.
Okay.
So inside, call it the current footprint of Springpole. It's long been theorized that there's a fault offset here. It's kind of abruptly cut off at about 500 meters. And we've started to get sniffs of in our geotechnical drilling and other things, starting to get sniffs of there is more to find right in here. And part of building a geologic team and an exploration team, the reason it's been so important is it's actually allowed us to kind of go back to first principles in really understanding the geology of Springpole, which I think has opened up a lot of different opportunities as to where we think we might be able to grow it. So we're going to test a few of those this year. And to the extent that we have any exploration success, again, I think this is a real opportunity for repositioning of this project strategically in the industry.
Right. Okay. But again, remind me, your intent at the moment is you're building a big exploration team, but is your intent, once you get to construction decision, final investment decision, to flip this thing out, have someone else come in and do that, or can you move it forward?
Well, I think you assess that at the time, right? You always have to go down the path of understanding all of the opportunities that you have to move it forward. So, as you get towards that environmental assessment approval, you go down a path of project financing and understand to what degree can you finance this project yourself and have that as an alternative. And then, the board needs to weigh off on behalf of the shareholders and other stakeholders in the company, needs to weigh off on a risk reward basis. Should we be building this ourselves? Should we be bringing in a partner to help us build this? Or is there someone who would want to acquire it at that time? So, it's a well-trodden path. In robust markets, it's usually pretty efficient price discovery around these things when you get it to that point. But that's kind of the maximum value before that beginning of construction. So, and we haven't been in an environment where we've seen a lot of that type of activity recently, but I think we'll get back to that type of environment here as gold, as you said at the outset, gold's pushing up toward $1,900. And the producers, who, by the way, probably did all of their budgets at the end of last year at $1,600 because that was the prevailing gold price, now all of a sudden are going to have $300 of extra margin, to be able to afford strategic investments, be able to afford, strategic acquisitions.
Right, but let me start. I'm going to keep going on this point a bit, which is, I get that at the point you make a construction decision, or in a position to make a construction decision, or be able to work out whether you can get this thing financed or not, because you'll understand the economics a bit more. you will have to build a team who can actually build it if that's the route that you're going down. You're not doing that. You're not signaling to the market that that's your intent at the moment. You're signaling potentially JV. You're signaling potential acquisition. I mean, if it's an acquisition, I'm intrigued of what more you've got to do and where the value comes in, because when someone comes along and offers to buy this off you, they can offer you 20, 30% premium. You get lynched at today's prices. So what are you going to do? And what are the things we should be looking at, saying, you know what, there's a bit of exploration. We don't know what that's going to bring, but hopefully that's a bit of blue sky. But with regards to Springpole as we know it today, you got 2.5 years of the environmental to go through. What are these de-risking moments which add value?
Well, the biggest one is getting through the environmental assessment process. And it has a lot to do with this legacy perception of Springpole because the deposit sits under the bay of the lake, right? So I think, when you have approvals, environmental assessment approvals, and it becomes clear that you will be able to build this project, I don't think you're trading at $8 an ounce anymore. I think if you look at historically where permitted projects have traded, it's been in that kind of $50 to $100 an ounce. So, just kind of achieving on this game plan, you can see a runway to, that's 500 or 600 million US of value for Springpole. And today the market cap for the whole company is 200. And by the way, we have another 5 million ounce gold project in Quebec, which is equally interesting. And, I think we're very interested to see how quickly we can advance Duparquet. Kicking off an economic study there now, which we're excited about, and should have, certainly kind of by the third quarter, should have an ability to talk about that, not from a look, oh, this is amazing, we bought it at $5 per ounce, but let's actually really look at what we think this project is worth on an NPV basis.
Right, okay. And I do want to get on to Duparquet, but just finish off on Springpole. The environmental component is 2.5 years more work, and maybe 2.5 years before you can get the answer that you want, because of, I say, the position and the perceived position of the value of the company as well. It's sitting below the bay, right? So it won't be the first project that's been built under a lake or under a bay, but you've got to go through the process there. So why make the decision to continue to spend money on the exploration component on that? Why not go and put all of your money into Duparquet and just finish? So leave the environmental process going in the background with Springpole, but then really get focused on Duparquet. It's a big, meaningful asset which you picked up super cheap. Wouldn't that be a better use of your time, money, and effort?
I think there's room to do both. And that comes down a bit to capital availability. That comes down a bit to, I think we look at one of the other things that we fundamentally got right over the course of 2022. It was leveraging some of the other assets on our balance sheet to provide us with funding runway to be able to move the company forward. So, we've monetized $15 or $20 million worth of strategic investments, the Gold Line royalty toward the end of the year. And, we still have 20 other royalties. We still have project interests in Pickle Crow and Hope Brook. We still have our ownership in Treasury Metals. So we've got a lot of these other opportunities to turn some of those assets into capital to let us go. Listen, we're not talking about a $50 million exploration program at Springpole. What we're talking about is really thoughtful geoscience and then testing those targets. And based on success, if we're able to demonstrate that there is more resource opportunity in this belt, I think you get rewarded for that. And I think that the value may not come through right in the share price in day one, but fundamentally you get rewarded for that at the time when you're having those discussions a year and a half, 2 years down the track with a number of different groups about, potential partnerships or strategic interest in the project. So I really do think it helps in further moving this project out into, a kind of must-own status.
Right. No, I get it. And we have covered it in the past when we spoke in terms of your holding of Treasury and, Hope Brook and, Pickled Crow. And, there's real value elsewhere. And I appreciate you fact you picked up $9.5 million on the Goldland NSR as well. So, and the Treasury is good. That's what's giving you the confidence to be able to look at both. I think that's what I'm hearing from you. So let's talk about Duparquet. You picked it up cheap, but it needs some work. So what precisely is going to be happening in 2023 over at Duparquet?
Yeah. So the first thing is really, for the first time in 70 years, really committing some money to understanding the current state of that environmental legacy that's there. And that's really important, I think, in terms of us building our social license. It's a really interesting deposit. I think there's lots of room to grow that deposit from an exploration perspective. It still probably needs some infill drilling as well, but it's something that I think over the course of this year we will get a much, much better understanding of what the path going forward would be. First of all, on the environment side, because it's very similar in a sense to the Hard Rock project in Ontario that our team spent 6.5 years permitting. That need for work on the environmental legacy actually provides the impetus for the development and sort of aligns everyone's interest in seeing something move forward a bit more quickly. So, but you need to do the work, right? We need to really establish an environmental baseline there. And then we're starting in the economic studies to think about different ways that you might be able to scope this. One thing that we know is that there is a higher grade, lower tonnage starter pit there. That has potential to, be one of the higher grade open pits in Canada. And so lots to figure out about that, and we need people to do the real work. But I think, if we're sitting at the end of this year with some exploration success, we're able to demonstrate confidence in the resource that's there, and we're able to demonstrate, on a preliminary level, some economics and really deliver a time frame and a path forward for Duparquet. I think we will be able to declare victory by the end of 2023. So
okay, and again, so the timing of moving that through, because again, I come back to that question which gets thrown at you a lot, which is when does this thing get into production? How quickly can you get to cash flow? So there's an open pit solution with you're obviously high graded initially, just get the ball rolling, pay back whatever capex, etc. Quicker. How do you accelerate? Do you want to accelerate it? Because I forgive you if you didn't want to necessarily accelerate things into an economic environment which is still uncertain. Whatever gold price is doing, the cost of money, the cost of capex, and inflation still is claiming victims. Good projects have become marginal. I could forgive you if you didn't want to accelerate this, but could you, if you wanted to? What do you need to see to be able to make those sorts of decisions?
Well, and that really comes back to the discussion with the regulators in Quebec around what is that path forward. And that's something that we just, you need to have a certain amount of baseline work in order to really have that discussion. And I think we're collecting that baseline data. And we'll continue to collect that baseline data so we can work collaboratively to come up with, some of the environmental solutions that we need to mitigate some of that legacy. But I think that gets done in a staged approach. And I think, so far in all of our discussions, everyone recognizes that the thing that is needed longer term here is the same infrastructure that you need for a mine, right? You need a place to be able to either process some of this material or move it. And that's basically a tailings dam with a water treatment plant, which you need for a mine. So we want to have a bunch of those discussions this year. We want to scope on a preliminary basis a project so that kind of when we have that PEA in hand and we can talk about footprint importantly, with the community, we're not going to have all the answers. It's going to be a bit of an iterative process. But it at least should give us an ability by the end of the year to talk about a development time frame. Because right now it's still a little uncertain. If this was starting from scratch, you would be talking about, collecting 2 years of environmental baseline work, and then preparing an environmental assessment, and then going through the environmental assessment process. We think there's a lot of that work that has been done. And it's just getting everyone's buy-in on basically what the game plan is to move it forward.
Right. So and remind me what you inherited, because you talk about, what was it, 3.4 million ounces of M&I and 1.6 of inferred.
Yeah.
And I think one of your plans for this year, you talk about updating the economic study. Was that a PEA you inherited, or
PFS?
PFS. Okay.
PFS done in 2014 on a 10,000 ton per day open pit mine and mill that produced a total of about 1.7 million ounces out of the bigger resource that you've quoted. So, and part of that, what we've discovered is there was quite a bit of inferred in those pits. And that's in large part because, this project really saw a real flurry of exploration activity over a kind of 2 or 3 year period. But it was like 100,000 meters. Like, there's one of the years done by Osisko, and it was a classic Osisko drill program, like just go. And there was a lot of data collection, but not a lot of a lot of drill core collection, but not necessarily all the data collection that you would want to come out of that, because everything was kind of being done in a hurry. So it gives us an opportunity at low cost to go back and look at some of that with a little bit of time, really get, as we've done at Springpole over this past year, really get our team's hands on the geology, and then be able to use that to scope a program where you are going to increase the confidence in some of those resources, infill drill some of the parts of the deposit that you think could add ounces and demonstrate continuity, and have you in a better position maybe to be talking about a PFS more quickly. You're not going to need a huge drill program to go from PEA to PFS. And then test the extremities of these different deposits at Duparquet, because it's not just one area. There's a series of deposits there, all of which are not cut off. They're open at depth. They're open along strikes. So we think there's lots of opportunity just in the footprint right there. And then, you start, as we've done at Springpole, you start looking regionally, and we're already starting. What a lot of people forget is we're starting with 500,000 ounces of high grade in our Duquesne and Pitt projects, which are literally just down the road, like 10 kilometers. So there is a little district here that's just going to take some thought and time and attention to kind of pull together. And that's why this year is not huge dollars, but it is extremely high value. This is where I think you can outline the frame of a development project that we want to see move forward, and get the buy-in of the communities and the local Indigenous community and the regulators around a path. So that's why I say it's a really, really important year at Duparquet for us to get that stuff framed, so we're all marching in the right direction.
Yeah, okay. So I think my takeaway from this is, look, you reminded me of the extent of the portfolio that you've got, all of which has value, but obviously you want to retain control of Springpole and Duparquet, but you have other assets which you could liquidate should you need to. You've got some cash that's coming in from the NSI at Goldland. You've also got 20 other NSRs across North America and I think a few in West Africa as well. So cash-wise, there's I guess, a quiet confidence in you, but I'm more intrigued with what you do with it. When you say it's not a big year cash-wise, but could be in terms of value unlocking.
Yeah.
Give me, just in data order, can you give me a sense of what I should be looking at and for, and why it is going to unlock value?
So in terms of catalysts and sort of where we're going
Yeah,
to see
yeah. I
things
hate to
coming
use the
in.
word catalyst because the last 2 years, catalyst came and went. You see us going, oh, I got a catalyst moment. The market's gone, I don't care.
Yeah, yeah,
With a kind of long-term project, long-term planning, and something where you were talking about kind of shaping a plan
yeah,
for both assets, I'm interested because I'm interested in what those moments are
yeah.
and why they're truly important to the company. Whether or not the market rewards it is another matter. Why
Yeah.
they're important.
So let's start at Springpole. So one of the really important things that we're working on over the next 6 months here is working with the Indigenous communities, in particular the Shared Territory Protocol nations around our project, on scoping and Indigenous assessment for the project. So we're going through the provincial and federal environmental assessment process. The communities have a strong desire to do their own assessment process. We're supporting them in that. I think this is fundamental to the project moving forward. It's fundamental to the process of us, receiving consent from the communities to advance the project. And it's a really, really important process that's been done a couple of times in Canada, but I don't think we've had an Indigenous-led assessment process in Ontario. So we're very proud to be supporting that, and I think that gets us in closer dialogue and moving forward with the communities. I think with that, it will just demonstrate not any certainty of outcome because this is an independent process. They're getting independent advisors, but I think it just the process will be able to demonstrate that we have engagement and the communities and the company are working together going through that process. So I think that's very important. At the same time, we go through, and this is stuff that doesn't, make news releases, but every week there's comment responses going back to the 1,000 comments we received on the draft EA. And we go back and forth in terms of some real fundamental de-risking of the project from the regulatory perspective, because you build that understanding. And that primarily happens this year. So we're sitting, by the end of 2023, I think having addressed all of the regulatory issues and hopefully having made significant progress on the communities getting done a bunch of the work that they would need to do to comment on the EA process, but through their Anishinaabe-led process. So it's a really important year of building that social license and of building, the confidence that you're going to get there on the regulatory perspective. And I'm optimistic that, when you're sitting at the end of the year, if we do the work and it works the way that we hope it will, that you're going to be able to say with a high degree of confidence you're going to get to the finish line. So that's important. There's ongoing engineering work that's going into that. We're weighing off whether we update the economic study at Springpole, leaning toward the fact that we might. We haven't committed to it yet, but sort of towards the end of the year, if there are any changes in scope to the project through the EA process and through this comment response process, get those basically pulled together in probably a PFS update that would just reflect the project that's going to get submitted. And, from there to feasibility will be confirmatory in a sense. So I think we achieve those things at Springpole, and then on the exploration side, fully demonstrate that, there's near deposit growth potential and there's other real potential in this Bertucci Greenstone Belt. I think each of those things are very, very important milestones for the company. And then on Duparquet, we've got the initial baseline environmental studies that are ongoing, targeting an economic study in Q3. And, I think that is going to leave us with an ability to, hopefully, by the end of 2023, be able to talk more confidently about a development timeframe for that project. And on top of that, we will have exploration results that will be coming from, some of the infill drilling that we're going to be doing and some of the resource expansion drilling that we want to do at Duparquet. So it's lots to tackle. It's lots to tackle.